Hello, one and all present here. Greetings from the Commerce Society, Hansraj College, and welcome to Financiaga, the investment and finance health interview series. Financiaga is where we delve into dynamic world of finance by speaking with industry leaders who share their expertise and personal journeys. Our goal is to explore different dimensions of the financial landscape, investments, risk management, sustainable finance, and more, to inspire and educate the next generations of young professionals. Today, we're honored to have Mr. Nikhil Nath as our guest. He holds a wealth of credentials such as CFA, FRM, CAIA, and CIPM, and is a seasoned mentor and trainer in the field of finance. He's also a visiting faculty member at Freelance Consulting and a strong advocate for sustainable investing and ethical practices. Over his impressive career, he has worked as an RFP specialist and built expertise in sales and pre sales. He has led sustainable investing solutions at Fidelity International, leadership roles at prestigious firms such as Goldman Sachs and State Street Global Advisors. His passion for mentoring and deep knowledge of finance makes him the perfect guest for today's conversation. First of all, I'd like to begin by thanking you, sir, for so much for taking your time with us today. And we truly appreciate you sharing your knowledge and expertise, especially with your busy schedule. I think your insights will provide immense value, especially for all the first years here today.
Thank you so much. Arnav, if I read your name right, that's very, very kind of you, very generous on your part. I will try to guide more than misguide as much as I can.
Okay, sure, sir. So let's begin with the main section of our interview, which is the questions. We'll start with the basic few questions. First is about breaking into the finance industry. So here it comes. Given the large variety of career options in finance, many fresh graduates are unsure about which area of finance, let's say investment banking, corporate finance, asset management, what they want to pursue. So, in such situation, what steps would you recommend to clarify which path is best suited for them?
I think this is a great point where to start our discussion from because the understanding of how to select the path is more important than how you perform on that path. Because if you end up making the wrong choice of path and you're devoting yourself to it for the next 35, 40 years of your career, you're clearly working towards a path that probably does not resonate with you, but because you've made a choice, unfortunately, you're now on it. So thanks for asking that question. Um, Arnav, I'll just warn you that I have a habit of giving long-winded answers, but you must let me know when the clock disallows
Mhm.
us and we should move on.
Yeah, sure, sir.
So here's the first thing, Arnav. I believe how to find the best path for yourself, given the plethora of opportunities that lie, has to come from an inside-out approach. Very often, I find a very common mistake that's made by young professionals and candidates who are still studying is that they look at what sort of careers are available out there and they start from a top down approach where they look at the industry and then the careers, the roles, the functions, they come down to companies and then they try to sort of filter it from that process. Whereas I think it's got to be inverted completely. It should not be a top down, it should be a bottom up. I also call it the inside out approach. Inside out because first you're looking inside, you're introspecting within your own self where your interests lie. And one of the things that, again, I feel is not appreciated enough is thinking about your natural talents. As we grow up, and you may have read and heard parents, neighbors, friends say that this is how you used to be when you were really young, but now you've grown, you've changed so much. The fact of the matter is that when we were young, we were not inhibited and we were our natural selves. We've got to go back to those days and understand what are the things that came very naturally to us, which is why I think it's important for us to keep in touch with people who've known us, our close friends from childhood. We should be able to go and ask them, what am I like, if we've sort of forgotten ourselves. Okay, so understand your own self. Number two, understand where your interests are. Again, you got to discern between interest and passion. I may have 25 different interests, but one of those will be my passion. And the onus lies with me to discover which of those interests is my passion, right? Once you've done that self discovery, now you look outwards and then you say, okay, this is who I am, this is where my interest is. Can I superimpose my passion and get myself a role which allows me to do an entire day for the rest of my career the job that I love to do, it's not going to be a burden. You will not feel like it's a 12, 14-hour day. If you're doing something that you enjoy doing, you will not feel like it's a baggage for you. You will not burn out. And that's the most important thing, right? I may sound a little too psychological and philosophical here, but believe me, it really works. The people who've been through that process of introspection have been able to come out with good answers for themselves. The other thing, Arnav, I believe very strongly is that in that process of self discovery, you've also got to understand what are your priorities. Very frequently, misalignment of your own individual priorities with the priorities of the firm cause burnout. Burnout is not because of 14, 16, 18 hours at the desk working. Burnout is because you're not doing enough of what you enjoy doing. It is because of a misalignment of ideologies. So if you come from the ideological background where you say, I'm a new age man and I want balance of life. I'll work my 8 hours a day. I'll sleep my 8 hours a day, and I want to do the whatever I want to do with the rest of the 8 hours in the day. Well, that's fine. I'm not saying it's wrong. But then you got to look for a firm and a manager and a culture which allows you to do that. If you sit for an interview with the Goldman Sachs and you say, I am a believer in work-life balance, where Goldman Sachs believes you got to work 12, 14 hours a day at least, clearly there's an ideological mismatch. You made a wrong choice. You may feel good about working at Goldman Sachs, but you'll burn out, right? So that's point number two, which is very important. And I think thirdly, and equally importantly, is lack of knowledge is not an excuse. Okay. There's so much of information out there. In fact, I think we got to guard ourselves against excess of information. Talk to people, do your primary and secondary research. People should be busy on LinkedIn, getting active, connecting with people, adding value to people, and learning from them. There's one thing that I've done very successfully enough, and this is a trick. I'd rather call it a hack, which I don't see enough students doing. Spend at least half an hour on LinkedIn and look through the profiles of people. You don't have to connect with them. You don't have to speak with them. Just look through their profiles. See what is their academic background, what sort of background they came from, what sort of jobs and roles they got into, and what has been their career path. If the person is successful, invariably you will find that there is a strong academic background. From there, they've moved into good roles and they've diversified themselves by gaining skills across various functions. So I think that's some research that we don't do enough of. Just look through successful people and their LinkedIn profiles. People are out there for us to see and learn from their journeys. That's generally what I'll say. And I think I'll end by saying that we should not, early in our careers, we should not be very, very picky, very choosy about what roles we want to get into. We should be happy to get into roles and then know that career is a marathon. You got 35 years to go. Move, change your roles, diversify your skill set. Over a period of time, you'll figure what you really want to do. I'll tell you, Arnav, I worked 7 years in sales in my career. I now have 15 years experience. My first 7 years was spent in sales. I never enjoyed myself. I thought I was not I was not a perfect salesperson. My personality type probably was not suited to sales. But then it took me time to understand that. So the obvious question you can ask is, why did you get into sales? Because I did not know myself. It just took me some time for me to do it. And I think it'll help people save years if they're able to understand themselves as early as possible and get into roles that are best fit to them.
Yeah, personally, I think that bottom-up approach is what people don't think about enough usually. I think
Yeah,
that's a very unique perspective to it as someone who's also aspires to go into finance. I think that provides a very unique experience. And the
true.
things that you said about work-life balance, especially with finance, where, work schedules can get really, really, really hectic.
Yes, that is true. That is true. So yeah, you got to know your priorities really well. If you're willing to spend 12, 14, 16 hours because you want growth at all costs, well, so be it. Then please work with a firm that aligns with your ideology. So I think an ideological match is very important. That is why I recommend to all young professionals, when you're sitting across the table for interviews, ask as many questions as you can, because it's not just the company that is judging you if you're a good fit. You also got to judge if the company is a good fit for you.
And since we're on the subject of working hard, I think it's a perfect time for my follow-up question. For fresh graduates, is it any way that they can break into highly sought after or competitive careers in finance, such as maybe investment banking and private equity? Or is there like a ladder one has to climb over time?
Um, so the answer to that is yes, it's possible. I would never say it's not possible, but I will say it is not easy. Okay. It's not easy for the simple reason that there is certain amount of pedigree that you need to bring with you. There's a certain skill set you need to bring with you. And generally, private equity, venture capital, investment banking firms would love if you bring some experience with you. And how will you get experience unless you have experience, right? So that's the good old chicken egg problem that we have. It is possible, but there are things that one needs to do. For example, um, you've got to evidence, um, you got to display evidence of skill.
Yes.
Okay. And now here's what. So what's important in the statement I made is I'm not saying you got to possess skill. Just possessing skill is not important. You got to create a display of, show evidence of your skill. And the best way to do it is get on LinkedIn, right? I'm very active on LinkedIn. I have been for the last 12, 14 years. In fact, Arnav, most of the networks that I have made in my personal life as well as professional life in this industry has been through LinkedIn, and I don't think we utilize it enough. So I'll recommend anybody who has a LinkedIn account, please get active on LinkedIn. Post frequently, be thoughtful in what you're posting, try to add value, display evidence of your skill. This is what recruiters want. So what you want is that somebody who at some stage in his life is hiring, he should know that, you know what, oh, I remember this person had drafted something which makes complete sense. I'd love to hear more from that person. It happens. Okay, it really does happen. So at the end of the day, what you got to know is it's good to be a jack of all trades, but you have to be a master of one. So, what is that subject matter expertise that you're going to gain in what area of interest? That is something that you will have to gather. Um, Candidates come to me on LinkedIn and say, Nikhil, I want to get into investment banking. My obvious question to them is, all right, so what in investment banking would you like to pursue? They don't have an answer to that. So there is there is a belief that investment banking by itself is a role. Investment banking carries within it an umbrella of several different functions. You could be an investment banker raising funds, you could be an underwriter, you could be working
Yeah.
with companies raising funds for an IPO. So you could also be part of an investment bank which is engaged in consulting, probably, right? So there are various roles that an investment bank performs, probably advising on mergers and acquisitions. So you've got to know very well what you're targeting, right? Your ask has to be very, very specific. So, like I said, get on LinkedIn, display your evidence of skill, let your reputation precede you. That's very important. Academic credentials will give you an edge without any doubt. I don't think there should be anyone who has a doubt if a CFA or an FRM adds value to their career. It definitely does, irrespective of what stage of their life they're doing it. But most important enough, to crack such niche roles for young professionals, you've got to be able to network very well with them. And when I say network, Arnav, I do want to spend a minute trying to clarify what is the meaning of network, Arnav, okay? Because I think this term is grossly misunderstood in the industry. Network, networking, it is believed, is where somebody reaches out to me on LinkedIn, sends me a connection request. I accept that request. The person says, Nikhil, thank you very much for connecting. I'd like 10 minutes of yours. Can we get on a call? I have a few questions. I'd like some career guidance. I get on a call. I give the guidance I can. We hang up, and the person believes they've networked with me. That's not networking. What that is simply me sparing 10 minutes in helping somebody out with whatever little that I could. All right. And I'm saying this with a lot of humility. That is not networking. I'll give you an example of networking, Arnav. Networking is where somebody connects with me and says, Nikhil, I see that you've spent 7 years in wealth management. You spent 7 years in asset management, within which you've done pre-sales. I see you've worked with Goldman Sachs. I was wondering if this resource has struck you as yet, because I think for pre-sales, this particular resource is very useful, right? Now, what he's trying to do is he's trying to add value. He's trying to show something to me that I may not be aware of. Now, having been a professional in this area, there's a good chance that I will be aware of what he's already showing to me. But the fact that the person at least thought, you think there is a way, there is a semblance of a chance that I will not connect with the person? Of course I will. You think there's a semblance of a chance that I will not remember that person for a very long time to come? Of course not. I will, because I see that there is a genuine, authentic attempt the person is making with the right intent to add value to me. That is networking. Okay, it's a two-way street. So I just want to make sure that people understand what networking is. So academic credentials, displaying your skill set, and networking will land you the jobs and the roles that you need, irrespective of what experience you have. All right, so that's where I come
Yeah.
from.
Yeah, I think one keyword here would be being rememberable, and I think being authentic is,
Oh
I think,
yes,
what one should take away. What one should take away from that. And I think since we're on the subject of developing skills and showcasing skills, I think it's best to move to the next segment and to the next question and ask you what are these key technical skills, especially for like college students who want to focus on a finance career, given that the industry is ever evolving.
I missed the first part of the question, Anu. Could you repeat that?
Yeah, so basically, what I'm saying is, what are these key technical skills? You said that one should be able to showcase their skills.
Yeah, yeah.
So I think a lot of us would have have the questions. What are these technical skills? What are these key technical skills that especially college students like us should have who want to focus on a finance career, given that this industry is ever evolving?
Yes, I think that's a great point, Arnab. This is one aspect of a professional's profile that one tends to, skip over. You just keep worrying about, let me land a job without really caring about what is it that I can do to add value to my own profile so that I land the job that I want. So, first things first, I don't think there is any reason why anybody who aspires to be in the investment management industry, I'm not saying finance, because finance is very broad. I'm saying investment management. Anybody who aspires to be an investment management professional, I don't see a reason why they should not pursue the CFA at any stage of their life, even if it is today or tomorrow. There's never a bad time to do it. It is net positive, right? It's an investment of time, money, effort, etc. But eventually, it's going to reap the rewards. The one thing I very commonly state to most people is that till about 15 years back, having an MBA against your name was a luxury. It was an edge. Today, an MBA is a mere requirement, right? Today, having a CFA charter against your name is a luxury. 10 years down the line, it's going to be a basic requirement. And like I always say, you don't start digging a well when you're thirsty. You start digging much before that, right? So anybody who's not thinking of pursuing a CFA now, I think is well positioned to miss that bus. So when I say CFA, I don't just mean CFA. I mean academic credentials like CFA, for example, even an FRM, a risk management today is very highly recognized. I think it's important for a person to know their financial modeling really well. CFA will tell you how to value securities using the Gordon growth model, dividend discount model, and various other models. But if I give you an Excel sheet and I tell you, can you please do that for me on an Excel, you're not able to do it, it doesn't add value, right? So you should be able to apply the concepts that you learn in theory, in practice. So financial modeling is important. You should know your valuations. I think one of the skills that people should pick up at this stage, which by the way, I'm guilty of not having picked up enough of, is artificial intelligence and machine learning. I'm not saying that everybody should become a data scientist. All I'm saying is you should be familiar with those worlds to such an extent that they don't intimidate you. You should be friends with data analytics. You may not love data, but you got to embrace it. It's a fact of life, right? So that's another one. Plus, if you have an interest in research, let's say equity research or fixed income research, it'll help for you to pick up some coding skills which allow you to build your own models, right? Quantitative research is very popular with a lot of asset managers today,
Yeah,
right?
yeah.
Because it's really simplifies how that filtering process is done. A quantitative research analyst could deal with a universe of 1,000 stocks using quantitative filters. He comes down to a sample of 20 stocks, which can then be recommended to the portfolio manager. So it's a very efficient way of sampling and filtering, and that's a skill one could learn. You must know your Pythons for that. And sustainable investing, which I'm currently part of, has, I think, exploded in all the right ways. Everyone's talking about it, and there's a reason for that. Every asset manager is investing heavily in sustainable investing, which is also called ESG, environmental, social, and governance. I feel an aspiring investment management professional, be it whether you want to work with a boutique investment firm, a hedge fund, an asset management firm, irrespective, as long as you're going to be managing investments for institutions or retail, you must know your ESG and sustainability. Because again, if you are sustainability aligned, you have an edge today. But in 5, 8 years down the line, the way regulators are moving in the direction of sustainability, you're going to have to comply with requirements. So it is good that you become familiar with them now. So you have CFA ESG courses, which are available today. You also have the sustainability and climate risk, which is offered by GARP, which also offers financial risk management. So those are courses that one can pursue. And I think we don't attend enough workshops. I think we could do more of that. As members of
Mhm.
the CFA Institute, there's so much that happens out there. It's one of the things which surprises me, which is underappreciated. Every candidate comes to me and says, Nikhil, if I do a CFA, what are my career prospects? What's the compensation I'll start with? I'm like, these are just the wrong questions to ask. What you got to ask is, what else does a CFA offer to me? And you're part of an elite group. That network is just brilliant, right? So those things do add a lot of value. Participate in webinars and workshops. But most importantly, Arnav, what I'm trying to drive at is um, problem solving abilities. Irrespective of what experience you have, I think if there is one phrase that I want to underscore and highlight, even if you to ignore everything I've said till now, it is problem solving abilities. It doesn't matter what academic credentials you bring with you. As long as you are able to display problem solving abilities, people will hire you. Managers want people in their teams who will solve their problems for them. If you make your manager's life easy, he's obviously going to make your life easy, right? That's how it works. But then you've got to be aligned with the firm's ideologies, vision, etc., etc. But problem solving abilities are important. That's why I say have a case study approach. Case study approach is good not just for consulting. I think a case study approach works very well in corporate as well. And one last point, Arnav, I do not want to overemphasize the importance of academic credentials for people. It's important to have. It's a good to have. Um, I feel it's a necessary condition, but it's not the sufficient condition for someone to crack well in the financial industry. You know what I mean? 1 or 2 years into corporate, nobody's going to ask you what credentials you carry with you. After that, your performance on the job will speak for you.
Okay, since we've talked so much about CFA and certifications and being someone who is personally pursuing CFA, I think this
That's
next
good. All
question
the best.
comes. I think that, thank you so much, sir. I think this next question comes very naturally.
Mhm.
Aside from these certifications such as CFA, CFI, FRM, do you think possessing a strong skill set and practical experience can be equally or maybe even more valuable in securing a position in finance industry, even if you do not have these certifications?
Yes, I have known more successful professionals who don't carry these credentials than successful professionals who carry those credentials. So that should tell you one thing very clearly, that it is not a sufficient criteria. It's not like if you don't have these credentials, you're not going to succeed. That's just not how it is. And like I mentioned a while back, um, beyond your first 2 years, nobody really cares which MBA institute you've come from, how you got placed, and do you have the CFA, are you pursuing or not. Nobody really cares about that. After that, your performance speaks for itself. So I feel to that extent, if I was hiring, I would give more weight to somebody's experience, right? So if I have two people who've applied for the same job, they have similar CVs in the sense that they have a similar academic background, but there's one person who has more industry experience and there's one who has more academic experience, I will give more weight to industry experience. Because what that tells me is probably to an extent that person has wizened up to corporate culture as well. He is able to bring emotional quotient, right? It's not just about an intelligence quotient, it's also about an emotional quotient, right? So to answer your question, I will say industry experience is more valuable than academic credentials, but academic credentials do help you crack roles that you want. A lot of times people pursue these credentials because they want to change profiles. I remember when I completed my CFA, I had not completed my risk management by then. And the reason I was pursuing risk management was because I wanted to crack into risk management. I'd had 7 years in sales. CFA helped me because my reputation preceded and there was a lot of respect, etc. People sat up and took notice. But when I moved into risk management, when I wanted to move into risk management, I thought FRM was the way to go, and it worked well for me. So you got to have a reason and an objective why you're pursuing those credentials, right? Um, so a credential like a CAIA, for example, alternative investments, not very highly recognized in the country, in India as yet, but very highly recognized in the West. And if you notice, there are a lot of asset managers who are set up in India where you are sitting as part of the mid office and the back office, not the front office. They're not selling in India, but they've set up their operations and mid office in India. But you're servicing their clients in Europe and US. It's good to carry an alternative investment because it really adds value there. Your colleague sitting in Europe and US will have a lot of respect for you. So I think let's not restrict ourselves to just a CFA and an FRM, but there's also a CAIA, there's also a CIPM, that one can consider, which is the Certificate in Investment Performance Measurement. So what will these credentials do? They'll help you gain knowledge, skill, they'll give you an edge, they'll help you network, they'll help you start well, But most importantly, these are all journeys in self-discovery, Arnav. And I keep coming back to the same point. When I started my CFA, Arnav, I was absolutely confident I was going to be an equity professional because I loved equities. But as I went through the curriculum and I learned more about fixed income, I said, man, this is amazing. There's something like fixed income which I did not know about. And I love fixed income more now. I'm more aligned with fixed income than the equity world. And when I look back, I find myself very silly for having published the idea that I was an equity passionate person when I did not even know anything beyond equity. So here's the thing, be very careful what you claim you're passionate about. Do you have sufficient information, to know other worlds, to be able to understand what you're really truly passionate about, right? So that's the other thing. Academic credentials for me display somebody's commitment, somebody's curiosity, learnability, adaptability. And I think it's very important for me as a manager. If I know there's somebody who's completed the CFA level 3, or the one thing I know for sure, even before I've spoken to the person, is that this person can be trained, and this person has a level of knowledge that I can build further on. So your reputation precedes you, and I think that's very important. So I'd love to see young professionals who are aspiring high, gaining these academic credentials, and then hitting the industry with the confidence of telling the industry that, look, I know the stuff I'm talking about. You got to hire me, and I am extremely aspirational. I bring a promise with me. You just got to give me a chance and an opportunity, and I'm going to convert that for you. So that's the confidence that you got to bring with yourself as a young professional. Now, here's the thing. Uh, Once again, one caveat, and I'll just close this one in a quick minute. The one caveat I do want to state here is it's not all rosy, when you carry a charter. All right. I have my academic credentials. They challenge me every day. Every day that I step into office, Arnav, I have to defend and justify those titles I carry. Even though I completed my CFA 9 years back, I still have to read up on the CFA material, which is getting updated every year, so that I stay abreast of whatever's occurring and developing in the financial industry. People expect me to know more. So if you have a CFA charter, or you've cleared your CFA level 3, Arnav, and or for anybody else here, among the audience, you've cleared your CFA level 3 and now you're sitting for an interview, trust me, your interview is going to be harder. It's not going to be any easier because your interview expects you to know more. But trust me, that's a good place to be. You want managers to expect more from you. I'd rather that I disappoint my manager rather than have a manager who does not expect anything from me. You know what I mean? So pressure is a privilege. That's what I'll say to conclude.
Thank you so much for that. So I think there's this one question that a lot of people have, especially college students, since they don't have the inside information or the insights into how these finance professionals work, right? So there's this question: if you can maybe walk us through your typical workday, maybe at Fidelity, maybe at Goldman Sachs, highlighting how much time you basically spend on analysis, client interaction, decision making, and this is the most important part of this question: how these how this complex financial data out there is transformed into actionable insights in the organization. How does it work from bottom to top?
This is an absolutely great question, Arnav. This is one of the questions I always ask whenever there's a senior management who visits our offices. For example, we had a CEO who visited the office from the UK, and this is the question I asked her because we aspire to be CEOs of large organizations, but we really don't know how we're going to spend the day. So I said, could you please tell me how you spend the day? And it helped me visualize. So I think that's a great question. Um, there's several ways to answer this, Arnav, and obviously the question will be answered differently by everybody because people are all working in different roles. So my answer is going to be very specific to the role that I perform. I spent 7 years in sales, so let me start with the sales process. Okay. So the first thing that one would do is you would do a bit of a market research to identify where is a gap. Is there a gap that you can fill, right? For example, investors were moving away from active investing because active investing carried a very high fee structure. They wanted to move into passive investing, right? Indexing, etc., and benchmarking. So we said, all right, so we've identified the gap. Now that we've identified the gap, let's take this idea to our product team and check feasibility. So then you take that idea back to products. So the product manager or the product manufacturer will sit with compliance, legal, sales, etc. All of those people will come have discussions, look at feasibility of creating that product, right? So it's just not about understanding the gap. It's also about is your firm in a position to be able to fill that gap, right? Every firm cannot fill up every gap. So you got to have that technological prowess. It should be feasible for you to do it. So we'll do a feasibility check. Now, let's say we've found it is feasible for us to offer passive investing. So we will create an ETF product. Now, once you've created that ETF product, it's not your the story doesn't end there, right? From there, you've got to be able to market that. So then comes the process of marketing, and you launch that product, and then from there, the sales and business development takes over, and hopefully they will materialize on all the promise that has gone in and be able to sell that product. From there starts the feedback process. You go back to the client and you ask them, this was your need, this was a gap, this was a need, we've tried to fill the need, does this help you now, or is there anything else we can do? That stage is very important. If you skip that stage, then you'll be sitting under the delusion that you've done your job completely, whereas there may be still more gaps to fill. You get a feedback from the client, you take that feedback, and then you further work on that, and then you continue to monitor what the market is telling you, what the client is telling you, right? So that's generally how a sales process works. Now, I'll be very specific to my particular role. So for me, I would say in the quarters that were peak business quarters, I spent about 20% of my time doing analysis of mutual funds, securities, and portfolios. I spent about 50 to 60% of my time interacting with clients, because sales, right? You got to be meeting clients. That's the job you're required to do. So about 50 to 60% of my time was spent meeting clients. And I would say another 15-20% of the remaining time was spent in miscellaneous activities and reporting. So reporting is also an important aspect, where once you've sold something to a client, the client now expects you to send them statements and continuously report to them on their portfolio development and how it's coming along, right? Not just reporting to clients, but also reporting to regulators. So another 20% time would be spent with regulators. Now, these are the three basic activities that I'll usually be engaged in. The percentage weight will differ from one quarter to another. So generally, the last 3 quarters of the year, when we are expected to push ourselves and achieve the year's targets, are generally the ones where our client interaction becomes 70% and everything else takes a backseat. But the rest of the year, where we still have the year ahead of us, we sort of, we are just warming up to the year. Probably client interaction will be 35-40% of the time.
Okay, so just a follow-up question on this. Just to give you an example, a situation basically. Let's say you're trying to develop an ETF product, right? So, what departments would be working on that? How many and what departments would be working on that? So, just to
Yes.
tell you.
Yeah, I think that that's a valid point. So in fact, I have worked on development of an ETF, so I think I'll be able to give you first-hand insight there. Um, Legal is going to be involved, Arnav. Okay, and I'll tell you why. The jurisdiction where you're going to be launching that product from should allow you to launch that product. You should be allowed to market that particular product. So you got to get legal clearances. So your legal is going to be involved. Your compliance is going to be involved. You will have people who are from a team called onboarding who are going to be involved. They are the ones who will be responsible for ensuring that clients receive the ETF product in the manner that they expected to, right? So they do not get a different version of the ETF from what they had expected, right? That's called onboarding. And of course, sales is involved in making sure that sales is really the intermediary between the firm and the client, right? And apart from that, the most important people who are involved in this are the product manufacturers themselves. Now, what is product development there? Product development is really a set of people who are very good with numbers. They are the ones who are looking at statistics. They are the ones who are looking at what are the potential sales from the product, what is the revenue that will be generated from the product, what is the cost of manufacturing the product and marketing the product, and is it even feasible for us to sell the product to stay competitive. So if an ETF, as you may be aware, Arnav, that ETFs are very low cost products because these are passive investing products, very low cost. In fact, ETF fees for certain ETFs has even gone down to 5 basis points. Imagine that, right? 5 basis points is hardly anything. Can you beat 5 basis point? It's very difficult. So for an asset manager to come up with an ETF product offering it at 4 basis points, that's hardly a margin that you're operating at. So sometimes you can create a product, but it's not feasible for you to market that product. So that feasibility check is also required to be done. So generally, when you're creating a new product and you're manufacturing, apart from HR, I don't think there is anybody in the firm who's not involved in that process.
Okay. I think that helps a lot in understanding what is actually involved in developing these products, what departments actually, what departments can actually one explore, what jobs can one explore. So I think
Yes.
that helps a lot in all of that. So now you've even talked about AI, right? Regretting not keeping up with AI and machine learning. So what is your opinion on how finance professionals have adopted to these advancements, and even more so use these advancements to their asset management or even allocation strategies?
Um, this is a very contentious aspect. So the reason I call it contentious is because we as finance professionals have not had a choice. You may sit on the fence as a finance professional about whether you like AI or you don't, but the fact is, when the industry is adapting and adopting AI, you might as well do, right? So, like I said at the start, you don't have to love artificial intelligence, you don't have to love machine learning, you don't have to love data analytics, but you got to embrace it because that is the future. So, for us as finance professionals, we've had to develop our skill set. Our firms have been kind, our employers have been kind to put us through regular training sessions, which is what I expect any employer to do, because you can't expect your people to overnight develop a skill which is required by the industry. Just because the industry now has it, your people will have it. Well, they won't have it unless you give it, right? And that also reminds me of a meme. It said something like, it talked about how much should you invest in training your employees. So there's a CFO who's telling the CEO, what if we train our folks and they leave? The CEO says, what if we don't train them and they don't leave? Right? So I think as a firm, what you want to do is you want to err on the side of investing in training people. So that's what's
Yeah.
happened with us. We've been trained on a lot of aspects of data management, etc., etc. Thankfully, we've also been given the option of which area would we want to specialize in, so that we've had that option to be able to choose and then be part of those sessions. We've also had external experts coming in. Our firms have sponsored some sessions for us with some renowned institutes wherein we'll be able to gather those skills. So as young professionals, those are questions that I feel one must ask. What are the kind of exposure opportunities we have? Will the firm be kind to sponsor certain academics for us? And most large firms today are very happy to sponsor or reimburse you the cost of CFA and FRM, etc. So those are things that young professionals should definitely be on the lookout for. Now, coming back to your question, Arnav, I think AI ML has not just impacted. I think it has brought a paradigm shift in the way asset management is conducted, from robo advisors, which have reduced the need for individuals sitting across the phone line. Today, as a prospective investor, you can have a chat with a robo advisor, and the robo advisor will do a fairly good job without the biases that we humans bring. Right. So a lot of times robo advisors can be trusted better than us humans, because I may promote a product that gets me more commission, but a robo advisor will probably not do that. Right. Plus, with chat GPTs around, I think investors are better informed. It was easy to get away with lack of information and misleading investors 20 years back. You can't do that today. So you've got to give credit and respect the fact that there's a lot of awareness in the industry, not just at the side of us professionals, but also on the other side of investors, and you got to respect that. It makes us work harder. That is what AI has done. It's making us work harder, but that's good, because um, there tends to be a complacency that tends to set in over a period of time, right? If you keep doing things the same way, there's got to be something that disrupts the way you do things, right? And this is what AI has done for us. The way that data is analyzed, the manner in which data is used to extract intelligence has completely changed. The decision making today is done completely through artificial intelligence in most asset allocations. So when I say asset allocation, I mean what percentage equity, debt, etc., and when do you rebalance portfolios. Those guidances today come from automated softwares and tools, especially Monte Carlo simulations and a lot of other softwares. So I will say that the entire portfolio construction process has got affected, and there's a paradigm shift. And I feel if there is anybody who aspires to be part of the investment management industry, you've got to be aligned with the change. You don't have a choice. Roles are already becoming redundant. I don't see a need for a lot of RFP writers being humans. You know what's an RFP? RFP is just responding to a questionnaire. So you
Yeah,
don't need humans responding to those questionnaires. Today, artificial intelligence will do that for you, right? And they'll do a better job than an individual, than a human RFP writer will do. Fundamental research is going out of favor. Human traders are going out of favor because there's so much of algorithmic trading today that's come about, right? You don't need human traders anymore. You just got to set up the algorithm and it's going to do the job for you. So you got to embrace it. You don't have to love it.
So, do you think on a large scale, aside from the C-suite professionals, analysts who are at the bottom of the corporate hierarchy, there can be mass layoffs or mass replacements with
There already have
AI?
been. There already have been, Arnav. And that's why I say, um, be very careful when you get into a very operations based role. For anybody here among the audience, be very careful about that. Look at the possibility of your role being automated in the next 5, 7, 8 years. If there is any possibility that your role will be automated, there is a very good chance that you will not be required. It has already happened. A lot of these roles have got automated. A lot of operations have been set up with the help of artificial intelligence, and machine learning has made AI even better, because machine learning simply means that it's improving on AI, with every series, with every iteration, it just keeps learning, right? So probably ML learns better than we humans do. So a lot of pure operations role will not exist for humans, at least in the next 10, 12 years. I think you're going to find 70 to 80% layoffs, especially in the financial sector. Plus, we've not spoken enough about blockchain and the cryptocurrencies that have come about and the way that these have impacted asset allocation and portfolios. I have interacted with a lot of institutional clients today who are asking me about cryptocurrencies and what my firm offers as far as cryptocurrency is concerned. If my firm is not ready with that platform, we are losing those clients. So it becomes even more important today that you offer a one-stop shop solution to the client. You cannot say, sir, we're going to specialize in equities. For anything else, go to the other firm. You're going to lose the client. So that's where AI and ML becomes even more important for a firm to adopt. Because if others are offering, you better be offering that. Because otherwise, you're going to lose clients.
And with development of cryptos and blockchains, it must be hard to, juggle through the regulatory compliances with all of that.
Yes, most definitely. Although I'm not from the regulatory side, but having been in touch with a lot of people who are responsible for their engagements with regulators, I find that they are losing more hair than I am. So I understand that there's more stress on their side of the life, because the regulators' expectations are also increasing. Mind you, Arnav, with the advent of blockchain, by the way, blockchain is a technology, right? That's a protocol, that's a technology. It has various use cases. Cryptocurrency is just one place where blockchain is utilized. And frankly, I don't think cryptocurrency deserves the word cryptocurrency. It doesn't deserve the name currency, because it's not really a currency. It's not a stable store of value. It's more an asset. In
Yeah.
most times, it's a liability. So I think it's a misnomer which the industry is now beginning to come to understand. But having said that, I think blockchain has several uses, especially in banking, financial services, non-banking, insurance. uh, the technology will have better adoption and utilization in the future, and I don't see a very, very bright future for cryptocurrency, simply because there's too much of volatility for it to store value, and there is no fundamental basis for cryptocurrencies to carry the value they do. There is no cash flow that you can expect. How do you apply a discounted cash flow model to cryptocurrency to value them in the future? You can't do that for Bitcoin. The only way Bitcoin has value is because you expect there'll be a fool who'll buy it for a higher price than you will sell it for.
Okay, so since we've talked about blockchain and ML, even personally, someone who's on apps like Grow, Motilal, Angel Investing, all of that, they provide you with, you know, tech analysis ready on the go, fundamental analysis ready on the go, advice ready on the go. Now with these fintech innovations, what are the main risks that are involved? How do you
Risks.
juggle with the risks that the company might face and what an investor might face? Because you are also getting people to trust machine learning, right?
Yes,
You
yes,
are shifting from a preference of brokers, investment bankers, professionals who advise people to a program on your phone advising people to buy a certain stock or
yes,
change their allocation strategies.
yes. Yeah, that's true, Arnav. I have absolutely no doubt in my mind that the risk management environment and the risk culture has completely altered. The way that firms manage risk today is very different, markedly paradigm different from what it was 10, 12 years back. And the reason for that is very simple. Today, the kind of cyber security resiliences that you need to have in the firm is nothing like what you needed 5, 10 years back. You got to be much stronger today, at least from a cyber security robustness is concerned. You got to have external audits, internal audits. You may have heard of the three lines of defense. Today, the three lines of defense is not just recommended, it is a requirement by the regulator. The first line is business, the second line is the risk management team, and the third line of defense is internal and external audit, which we also call assurance. So these three lines of defense have also completely changed. And that is why I think it's a great time for students to learn about risk management. There's going to be a need for risk managers in the future, and I don't think we realize enough of that. For somebody to carry the skill of risk management, knowing that the firms open up to a lot of risks because of the advent of digital innovations, has increased markedly. So I think it's a great time for people to even pursue the financial risk management. And I feel, if I was to summarize the risks, I will say the single largest risk lies in the fact that enough firms adopt technologies that they don't understand, and yet they rely heavily on it. So you're adopting a technology, a platform that you don't understand very well. You're relying very heavily on it, and based on that, you are making promises to customers, and obviously those promises will not come through. Those promises will fall, right? And you're going to be disappointing customers at the end of the day. So I think what's important is for companies to understand what is the feasibility for them to adopt a certain technology, and have skilled people, personnel who know their stuff, be state of the art when it comes to ensuring that those technologies work for you and they work for the client, right? And I think blockchain is the way to go in terms of security, decentralization, anonymity, a ledger of records. I think blockchain is the way. I think you'll see blockchain in virtually every aspect of asset management going forward.
And on the subject of personnel, professionals who are up to date, let's talk in the perspective of a student who's learning finance. So, what are the best resources and strategies you can recommend a student learning finance to keep up with these latest trends and these regulatory changes?
Good old fashioned enough. I think a lot of listeners here will be disappointed when I say good old fashioned read. Just read. You may hear your parents telling you that, but they say it for a reason. I don't think we do enough of that enough. Today, I see that we have a lot of distractions. We're not able to really, our attention spans have really fallen big time. Our attention spans are today in seconds. They used to be in a few minutes and hours years back. Today, it's a few seconds. We got to work on that. Um, I'll give you the example of Zerodha Varsity, right? It's a great place for somebody to just open an account, visit the website Varsity, and just go through all the learnings that the Varsity has to show you. A person who's devoting 2 hours a day can learn everything about trading, portfolio, asset allocation on that website within 6 months. And that is my assurance to you. 2 hours a day for 6 months, you're learning everything that you need to know. You don't need a CFA to be able to plan finances, right? That's point number one. There are also websites today offered by Zerodha which will allow you to backtest strategies. Now, how brilliant is that? So you don't have to actually invest your money in certain strategies and then see how they work. It'll allow you to backtest. Just put your strategy there. It'll tell you this strategy would have performed in this way in these last 5 years. So you're going to be able to backtest, in that UAT environment, which is brilliant, right? Um, I think LinkedIn is a great place, is a wonderful resource. You should go to Bloomberg, subscribe to Wall Street Journal if one can afford to. You've got to participate in discussions online. You got to read books. You got to be very selective about the authors you read. I think we have limited time in our life to read, books, so you must pick up good ones. I have a list of recommended books that I can share with you. People must read Nassim Nicholas Taleb. He's a contrarian philosopher and an options trader and a faculty. Brilliant guy. You must read the book called Skin in the Game. You must also read his book called The Black Swan. Anybody who's interested in technical analysis, reading charts, price points, should read Market Wizards. You should read Psychology of Money for people who are beginning, with money matters and learning financial planning. Learn about coffee can investing. Create your portfolio based on the coffee can investing. And if you want to learn about hedge funds, read a book called More Money Than God. Absolutely incredible. You read these books in the next 12 months, I think there's going to be a transformation that one's going to see in your thought process about investments, right? And you got to stay abreast with all the latest developments. Just you got to read. You should know how geopolitics is affecting markets. You should know that the interest rates are high today, and there is a reason for that. right? So we are in a high interest rate regime. It's because after 2007-9 crisis, rates were dropped down to zero and even negative in some places. It caused inflation, and to control inflation, the monetary policy states you got to raise rates, and now there's a clamor to reduce rates, etc. So we are at that cycle, at the point of the cycle where we're expecting a recession going forward. So when you read things like these, you should be able to connect the dots. So over a period of time, you'll find when you look at these resources very judiciously, you will find that you're able to connect the dots, right? That's the important part. So when I learn tomorrow I'm expecting interest rates to fall, I should also be able to tell why interest rates are expected to fall and why they are as high as they are today. So that's the analysis that has to go on in your mind. You should know what the US elections are going to bring to the markets. What are asset price bubbles? Learn some technical analysis, resistance and support levels. I think these are things that one can do. So plethora of information out there. But you got to be very selective about what you're spending your time with. And I think the items I've just mentioned here are good places to start.
Okay, I think a lot of the first years who have been asking questions to us about how to get into finance, how to start learning, how to become more advanced in it, I think they'll cherish all these suggestions. And I think one
Correct.
thing that resonated with me a lot was connecting dots, because I think that's what exactly what I'm thinking when I read connecting dots. I think it's one of the best pieces of advice to be able to connect dots, because when you're able to connect dots, you're actually able to solve problems.
And Anav, that's also called situational awareness. A lot of very experienced professionals do not carry situational awareness. So what they're not able to do is they're not able to zoom out and have a bird's eye view look at it. It's only when you zoom out of the situation, because if you're looking at something under a microscope, you're just very focused on that. It's very micro. It's called it's called an idiosyncratic view, which is very specific to that issue. You got to zoom out. That's how you connect the dots.
Yeah, I think that is one of the best pieces of advice. But because even when I have people asking me, how do you start learning finance, juniors, I think that is one of the things that I've even said myself is learn how to connect dots.
Yes,
I think.
precisely.
Okay, so since we're ending with that time, I think I just ask you one last question that we've had. Uh, Clearing interviews, right? Clearing interviews for finance-based roles. Some questions can be even double-edged swords,
Yes.
right? So
Yes.
how do you juggle these questions? How do you juggle such questions?
Something, this topic is very close to my heart, Arnav. I have interviewed candidates for more than 12 years, and I have found something which has fascinated me. When I look at a CV and then when I meet the person, there seems to be such a contrast between the person I meet and the person that I felt would turn up looking at the CV. And I feel CVs don't do justice to people. I think people are humans. You got to meet them and then judge them. But there are a few things that one can keep in mind, as a young professional who will be sitting for a lot of interviews, and this is obviously meant for all the audience who are listening in here. Um, if you're asked, how do you spend your weekends? It's not a casual question. Okay. I want to guarantee you that. I'll tell you why. You're judged as an individual more by how you spend your free time than how you spend your time at work. Because at work, you got to do what you're expected to do. You're paid to do that, right? So you don't have a choice. You can't be sitting on Netflix at work. But if you happen to say that, oh, weekends I chill, because I work really hard 5 days a week. I chill on weekends. I go out party every Saturday. I have to party. I got to meet my friends. And of course, oh, I love my Instagram. I'm on Reel and I'm very popular, etc. I'm not sure those things go really well, right? So remember, how you spend your free time is how you're judged, really, not by how you spend your working hours. And how you spend your free time is also the single most important determinant on how your career unfolds. Contrary to what people think, that I'll work hard Monday to Friday and it'll get me places, it's what you do on Saturdays and Sundays that gets you places. All right. So please do bear that in mind. The other thing is a question that trips a lot of people. Okay. What's the most important thing about you which is not on your CV? Right. Now you got to handle that very carefully. You got to express things that are your passions. You got to show that you're curious. It's good to talk about things that you've done as a social good, philanthropy, charitable causes, and all that stuff, if you've been doing it. Okay, obviously don't misrepresent. But this is a question that trips a lot of people. The other question that I feel one should be well prepared for, which can be very tricky, is your manager tells you, I don't like surprises. Is there anything I should know about you before you come on board? This is another way of asking what are your weaknesses. So instead of asking you what are your weaknesses, he'll say, I don't like surprises. Is there anything about you I should know before you come on board? Now you have got to handle that very carefully. Um, so don't be over smart about it. Don't show weakness as a strength. That I am so good that I can't believe how good I am. Every day I'm surprised by myself. I mean, that, you know what I mean? People can
I'm a
see through all of that.
perfectionist.
Yeah, I'm a perfectionist and all that. No, those things don't work. Be very authentic. I'll give you examples. I am better at individual contribution. I'm working on improving my team play. It's very genuine, very authentic, and people will appreciate you for that, right? I tend to extend my pre-start analysis. I spend a lot of time analyzing a project before I get down to working on it. I'd like to spend less time there or balance it out, right? I'd like to front end my projects more. I tend to leave a lot for the later. So those are things that come across as very authentic. No one's going to hate you for that. No one's going to think that you're not good for that. And believe me, if you're able to express authenticity in an interview, your interviewer is going to like you. And likability is very important. If you don't trust what I'm saying, Arnav, if you think that I'm not being genuine and authentic about what I'm saying, I know that you will forget everything that I've spoken to you about today by the end of the day. But if you think that I've been authentic in the things that I've told you, you will remember them because you know that it's coming from a place of high sincerity, and I become more believable. So that believability is very important, right? Describe yourself. Do not self-aggrandize. Every time I've asked somebody to describe yourself, they've gone on harping about how brilliant and how great they were. But that's not what I'm asking you to do. I'm just asking you to help me to understand you better, right? Why did you leave your previous role? Do not badmouth your past organization. Do not talk about how difficult it was to work with them and how easy it's going to be to work with you, right? That's not what they're expecting. Another question that I'm going to leave everybody with to think about is, what is the one belief you have which you think is a fact which the rest of the world disagrees with you on? You can think days and days on that, but you will not get an answer because this is a very tough one. I'll repeat that. What is the one belief you think is a fact which the rest of the world disagrees with you on? I'll give an example of that. So if you were to ask me that question, I will say, I believe that fluency in communication does not come from vocabulary. I believe it comes from clarity of thought. Okay. This, I think, is a fact which the world disagrees with me on. The world thinks fluency comes from vocabulary. I believe it comes from clarity of thought, right? So on those lines, okay. And be willing to justify the adjectives that you use for yourself. Leadership. I'm a team player. I have attention to detail. You will be asked, please provide evidence. And that's the worst time for you to start thinking about evidence and not be able to come up with a few of them. So these are some important interview questions that I have noticed candidates tripping over, and I thought I should share with all of you.
Okay, I think we'll just move on to the last question since we're running out of
Yes,
time now.
sure.
Okay, building on to that, what are some essential qualities that companies would look in young professionals, especially in the finance industry itself?
Irrespective of which industry, Arnav, I will say the first thing any manager firm will look at in a prospective employee is skin in the game. All right. And I'll tell you what I mean by that. What I mean by that is, suppose, Arnav, I was interviewing you for a role in my team, and you were to tell me, Nikhil, I'm so passionate about equities. I can assure you, Nikhil, you're not going to find a second person there who knows more about equities or is more passionate about equities. I want to know if you're able to prove that. Just by saying it is not enough. So I want you to be able to prove it. I need you to tell me, what is it that you've done about your passion? Have you pursued any certification? How much do you read? Do you know this, and that? Right. So I want to know if you have a skin in the game. That's very important. Right. And that is what a CFA also does. You may not have experience, but the fact that you're pursuing a CFA means you have a skin in the game. You're absolutely certain that you want to be the best in the financial industry. Right. Point number one. Number two, I want to see people who are driven by their values and that their values and ideologies are aligned with that of the firm. That's very important. I want somebody who's driven by values, right? Principles. That's important. And those principles should be aligned with that of the firm. That misalignment should not be there. I want to see a person who's curious, he has an attitude to learn, and the person should be trainable. Often there's a sense of entitlement that comes with young professionals. They say that, I've done my MBA from one of the best places on earth and I'm entitled to this role and you got to give me the best. Right? Tell me what can you offer to me rather than asking what is it that I can offer to the firm. Um, those come across as arrogance, and that's not really very highly respected. So there's got to be a display of humility, right? There's got to be a long-term horizon. It's the last thing I want to see as an interviewer is to find a candidate who's just looking at this role as a stepping stone, 6 months, 12 months, 18 months, right? And one of the most important things which I'm going to close with is when I ask them, do you have any questions for me? A very important phase is when the candidates ask the interviewers question. Your questions have to be smart. You know, people don't prepare well enough for that. What is my career path going to be? What is the exposure? Does the firm have an open door policy? Can I meet your CEO if I want to meet him? Right? What is the average vintage of personnel or professionals in your firm? This position that you're hiring for, whosoever vacated that, why did they vacate it? These are questions that should be asked. It tells the interviewer that you're really concerned and you're invested in this role. You want to know more.
Okay, so I think one thing that resonated with me is alignment of your personal values and with that of the firm. As someone who's going to be leading a team this semester, I think that is very important for me, even personally, for a person to be able to give their all to the firm and that they're willing to do it. Right?
Uh,
Willingness, I think, is
yes,
very important here.
precisely enough. Precisely. And I'm sure you're going to do a very good job. You're a very level headed person. I'm quite impressed. You'll do a good job. All the best.
Thank you so much, sir. Thank you so much. And with that, I think we come towards the end of the interview. Before we end, and on a very genuine note, my sincerest gratitude on not on my behalf, but of the Commerce Society, and especially all the students of the Commerce batch who have been listening to you. I'm pretty sure that your insights will be very valuable. And first of all, and last of all, I really appreciate your willingness to share your experience and provide guidance with us. We don't get a lot of those people. So a sincere thank you on that.
That's so kind of you. No, very, very, very nice of you. Very generous. And it is completely my pleasure to be here. It's the second time that I'm interacting with you folks, and I'm absolutely enjoying myself. I'm thrilled to be here. Thanks for having me.
Thank you so much for being here, sir.
Thank you. All the best to
Have a-
everybody.
Thank you, sir.